Hey friends, welcome to Mind Over Market Stories, where we learn to master our mind before we ever try to master the market. Let me ask you something uncomfortably honest. When gold rips to a new all-time high and your feed explodes with to the moon, do you feel your chest tighten, your fingers inch toward the buy button, and a tiny voice whisper, "If I don't get in now, I'll miss it forever"? Be real with me. Have you ever chased that candle, convinced it was the last safe entry, only to watch price knife down the moment you clicked? 1 second you're a genius, the next you're staring at red, refreshing the chart, bargaining with the market like it can hear you. You told yourself it wasn't FOMO, it was momentum. You told yourself you had a plan, but your plan vanished the instant the wick printed against you. Tonight we're talking about the moment gold makes the headline, the moment the crowd screams inevitable, and the question that separates survivors from statistics: gold hits a record, did you just buy the top? This isn't about shaming bad trades, it's about exposing the quiet pattern that keeps robbing smart people. The emotional loop of hype, chase, squeeze, regret. If your heart just sank a little, it's because you've been there. So have I. And this channel exists for exactly that moment, when the chart is loud and your judgment gets soft. Here, we don't sell you fairy tales. We build the inner tools. Risk, rules, weight, discipline, a bias check that keep you from paying premium prices for someone else's exit. If that hits home, drop a yes in the comments. If you've never chased a breakout and instantly regretted it, say no, and please share your secret. Either way, stay with me. By the end, you'll know how to step back when the world leans forward, and how to choose clarity over euphoria the next time gold makes front-page history. I remember the noise before I remember the numbers. My feed turned into a siren, red banners, blinking tickers, big fonts screaming, gold at a new record. People I hadn't heard from in months were suddenly DMing charts, circles around breakouts, arrows pointing up like the sky owed them. The price had sprinted from respectable to "you gotta be kidding" so fast that rational thought felt like a luxury. That's when the question slid under my ribs. What if this is the last train? I'd told myself I wouldn't chase. Then I watched gold lurch to the edge of that mythical line everyone was chanting about, the round number, the kind of level that turns careful traders into gamblers. I wanted to believe I was different, smarter, calmer, but my pulse didn't care what I believed. It kept tapping a single beat. Go now, or be left behind. Before the top, there's always a dip that looks like mercy. It rolled from the fresh high down $100 in a blink, like a wink, like a test. The timeline filled with victory laps from people who sold the pop. I felt the hollow ache of missing what might have been the last clean exit, like walking past a door and hearing it latch behind me. We all told ourselves the same story. If price revisits that level, I'll do it right this time. I'll sell the kiss of the high. I'll nail the top. Except markets rarely replay the scene you've scripted in your head. A few hours later, the pullback dried up. The bids came back mean and fast. Through 2900, through 2950, the candles stacking like dominoes kicked in a straight line. The round number wasn't a ceiling anymore, it was kindling. My screen lit up, my heart followed. Everyone could feel it, the moment where the crowd believes the word inevitable. And inside the word inevitable hides another word you don't see until it's too late: trap. I was supposed to be the voice of reason. Risk first, plan first, rules first. But reason is quiet and the internet is loud. Limit cells blossomed above the round number. Threads filled with perfect theories about why price would tag it, reject it, and tumble. I nodded along while my fingers hovered, pretending I was patient. When the breakout came, it did not whisper, it ripped, clean through. No breath, no grace. And then came the worst line to hear when you're short or out of position. No pullback. In the wreckage of that sentence, I saw people I respected do the thing we all swear we'll never do. Fade a freight train because our identity needed to be right more than our accounts needed to survive. I saw heavy leverage married to heavy certainty. It's a glamorous wedding with an ugly divorce. Gold didn't flinch at our confidence. It powered into new air, 3-100s, 3-150s. Levels that turned the chat into an open mic night of hot takes. Those who had shorted where it made sense found themselves negotiating with the screen. They widened stops a little. They sized a little more because this has to be it. And when the move didn't slow, they told themselves their system needed one more try. That's how accounts die, not in one cut, but in a string of tiny betrayals of your own rules. If you've never been there, let me paint it. Your P&L doesn't feel like numbers, it feels like heat. Your skin knows the drawdown before your eyes do. Everything in you wants to fix it now, not later, not after a walk, not after the next candle closes, now. The market hears that urgency the way the ocean hears a whisper. It doesn't. It just keeps moving. When price vaulted into the 3200s, 3300s, and chatter shifted from overbought to new paradigm, I watched dear friends do what I'd done in past lives. Flip from short to long at the worst spot, over-leveraged, late. Convinced this time the momentum would carry them home. I understood. Nobody wants to admit they missed the main dish and came back for dessert. But dessert is where the sugar rush turns to a headache. Then came the turn. Tops don't announce themselves. They build a stage of euphoria, then kick out the floorboards. In one day, we were measuring distance to 3,500. The next, we were measuring the distance from it. Down, fast, brutal, no ladder. In 48 hours, we watched price shear off a slab of gains that had taken weeks to build. You could hear the air leave the room. That's when leverage shows you who's boss. Traders who had levered long at the highs because the pullback will be shallow had no time to pivot. Bids vanished, spreads widened, stops slipped right when they were needed most. A small loss became a large one. Not because the idea was evil, but because the sizing was. Pain isn't linear when you're geared up, it's exponential. I kept my losses small that week, but not because I was a hero. I was lucky that my rules were in front of me when my emotions wanted the wheel. I had stops, hard ones. I had a fixed fraction of risk. I had a number I could not cross, no matter how convincing the narrative felt. That didn't make me immune. It made me accountable. I still took a hit. 10% on my book, real money, enough to sting, but I was alive to learn. A lot of good traders I know were not so lucky. They didn't just lose dollars, they lost the part of themselves that trusted they could come back. If you've ever blown up, you know the silence after is louder than any alert. The chart fades. The shame stays. You scroll your history looking for the one decision that started the avalanche and find 10 small ones that looked harmless in the moment. This is how markets teach. First they whisper, then they nudge, and if you ignore both, they shout. Everyone remembers the climb, 3,000, 3150, 500, because the numbers are easy to tell stories about. Fewer people talk about what those numbers do to your nervous system. The higher it goes, the less you want to be the fool who didn't ride it. The steeper it gets, the more you fear missing the one move that changes everything. And somewhere in there is the real trap. You stop measuring risk and start measuring status. Are you with the winners? Are you smart like them? Are you brave enough? Here's the part I hate admitting. My worst trades have never been about the market. They've been about me, about my need to feel safe, right, admired included. The market doesn't know or care about any of that. Gold doesn't check your profile before it runs your stop. It doesn't reward your hustle or your character. It reflects your behavior, period. When the dust settled, I took inventory. Not of P&L, but of process. Did I wait for my setup or chase the story? Did I size within my rules or within my fear? Did I place a stop where the trade is wrong or where my ego feels okay? Did I add because the plan said add or because I wanted to erase a mistake faster? On too many answers, I didn't like what I saw. So I did the boring thing that saves you. I rebuilt. I wrote the rules again and made them simpler. I capped my daily loss at a number I could accept without trying to win it back. I banned myself from adding to losers forever. I defined precisely where a breakout is valid for me and where it's just dopamine in a pretty dress. I made sitting out a win state. Because here's the quiet truth, not trading is a position. And during gold's parabolic sprint, flat would have been the strongest position most traders could hold. We don't like hearing that. It messes with our identity. We think traders trade, but real traders manage risk first and opportunity second. If you live long enough, opportunity comes back. Accounts don't grow back on their own. What about the ones who called it perfectly? The folks who shorted 3,500 and rode the knife down. They exist. They'll post screenshots. They'll become the example people use to justify a decade of top picking. But top calling is a career with high variance and short half-lives. You don't see the graveyard. You don't see the 20 times they were early, the 10 times they doubled down, the 5 times the market never came back. Survivorship bias wears a gold cape. Don't confuse a highlight reel with a process. If you stayed out of trouble, I'm proud of you. If you didn't, I'm with you. I've been margin called. I've stared at a chart and felt my chest cave in because the loss wasn't just money. It was a verdict on my competence. In those moments, the market isn't your enemy. Your untrained impulses are. Train them, and the market becomes a landscape to navigate, not a storm to curse. So when gold hits a record again, and it will, someday, ask yourself better questions than the crowd asks. Not how high can it go, but where am I wrong? Not what if I miss it, but what am I paying in risk to be in it? Not is this the last train, but is this my train? Because some trains get you there, and some take you off a cliff. The difference is rarely the destination. It's your map, and the map that saved me is small and unsexy. Define your setup. If you can't draw it with a crayon, it's too complicated. Pre-place the stop where the trade thesis fails, not where your feelings do. Pre-size so the stop costs are fixed. Acceptable percent every time. Accept missing big moves. Regret is cheaper than ruin. Never add to losers, ever. When in doubt, smaller size or no trade. Doubt is data. Journaling isn't for Instagram. It's for pattern recognition, yours. Most people don't blow up because they misread a chart. They blow up because they misread themselves. If you understand your tells, what FOMO feels like in your body, what revenge trading sounds like in your head, you'll recognize the early warnings. You'll see your own handwriting on the wall before the market writes the rest. Gold hits a record. Did you just buy the top? Maybe you did. Maybe you'll do it again unless you rebuild your process to withstand the days when the screen screams. Euphoria is a poor risk manager. Round numbers are magnets and traps. Leverage is a megaphone. Whatever you are, it makes you louder. I'm not here to scold. I'm here to keep you in the game long enough to learn the lessons you paid for. You don't have to trade every headline, every breakout, every "this time is different." You just have to protect the part of you that can show up tomorrow with clarity and capital. That's the whole secret nobody wants to sell because it doesn't sparkle. Live to take the next good trade. If this stung a little, good. In pain you understand is pain you can use. Drop a yes if you've ever chased a record and felt the floor drop. Drop a no if you've never bought the top, and tell us how you stayed disciplined so the rest of us can learn. Either way, remember what this channel is about. Mind over market. Not because mindset is everything, but because without it, everything else won't matter for long. When the headlines scream again, and they will, breathe. Shrink your size. Wait for your picture. Stand aside if you don't see it. Let the crowd do what crowds do. You do what traders do. Manage risk, manage self, and let price prove it. Not your feelings, not your feed, not your fear. Gold hits a record. The market will ask you the same question every time. Next time, answer it with your rules. Here's the part I want you to really take with you. Markets don't crown heroes. They expose habits. When gold prints a headline high, the temptation is to prove something. Your courage, your timing, your intelligence. But the only thing worth proving is that you'll protect your capital when the story gets loud. My biggest shift wasn't a new indicator. It was a new identity. I stopped trying to be the trader who nails the top and became the trader who survives the cycle. That one decision changed my results more than any setup ever did. If this run taught me anything, it's that clarity beats euphoria. Respect round numbers, but don't worship them. Keep your risk fixed. Put the stop where the thesis fails, not where your feelings do. Journal the impulse, not just the entry. Accept that flat is a position and that missing one move is cheaper than repairing a blown account. Most of all, remember, you don't need to predict the next candle. You need to manage the person holding the mouse. So the next time gold rips and the room starts chanting, Ask a quieter question. Who am I going to be when it's my turn to choose? The trader who chases because everyone's watching, or the trader who waits because your rules are watching? Choose the second one. Choose the boring win. Consistency over drama, process over pride, mind over market. If this hit a nerve, you're exactly who I make these stories for. I'll keep sharing the frameworks, checklists, and emotional drills that helped me stop paying tuition to FOMO and start building something durable. If you want more of that, no hype, just honest work, tap subscribe and turn on notifications. Not to catch every flicker, but to catch the lessons that keep you in the game. And if you've ever bought the top or sat it out on purpose, tell me below. Your yes or no might be the line someone else needs to steady their hand. We can't choose the headline the market writes tomorrow. We can choose the headline we write about ourselves. Make it this: stayed disciplined, stayed solvent, and still here.